Have you ever wanted to learn the language of business, but you either felt the material was either too boring or so overwhelming? I don't want to learn about accounting. No. I'm just going to show you the bare bones needed so you know how to better invest into the businesses that you want. Wait, so I can learn how to invest my money into different companies? Yes. These are the 4 different ways that a company can be formed. You have sole proprietorship, corporations, limited liability company, or LLC for short, as well as partnership. Sole proprietorship simply means that there is one owner of the company. If the company makes profits or it loses money, it is the responsibility of that one owner. That's it. Next, we have corporations, like the big companies like Facebook, Google, Microsoft, those things. These are the type of companies you're probably more familiar with, such as Apple, McDonald's, Coca-Cola, all those big companies. They're classified as corporations. Now, the great thing about a corporation is that it's considered a separate entity from its owners. So let's say, for example, Coca-Cola. They owe taxes and debts to other people. So if they're not able to pay that off, the company is not able to pay it off. But the owners are considered separate from the company. So the owners are not responsible. Now, the trade-off with a corporation is that it does cost a lot more. It's a lot more expensive to pay for all the legal fees to form the corporation, as well as both the owners and the corporation have to pay taxes. Now, the LLC, or the limited liability company, is a combination of both partnerships and corporations. It contains the taxation of a sole proprietorship but has the limited liability of a corporation. That's why it's called a limited liability company. Last but not least, we have partnerships. Partnerships are similar to sole proprietorships, whereas you're responsible for all the legal fees, any liabilities, and any profits, but it's shared amongst 2 more people. Now, it does cost a bit more than a sole proprietorship, as there are 2 or more people. Usually, you want to bring in a lawyer who can draw up a partnership agreement so everybody's in agreement as to whose responsibilities are what. It is important to understand that there are different types of businesses that can be formed, but we're mainly really just concerned with corporations. Why do we only care about corporations? Well, because with corporations, that's usually where you're able to invest your money into their stocks. So these are the 4 groups of different external users that are going to read a company's financial statements. Wait, what's a financial statement? Well, financial statements are the reports that are summarized by the financial results of business activities. It pretty much just shows how a company is making money and then where they are deploying their money. So out of these 4 external users, we're most concerned about investors, because that is you. But first, creditors is anybody that money is owed to. Usually it's going to be banks and suppliers, stuff like that. Directors is just a shorter version of saying the board of directors of a company. Then we have government, and that's going to be any sort of government agencies that are making sure that the company is doing business properly. This is going to be agencies such as the SEC, or the Security Exchange Commission, or the IRS. So our investors are going to be anybody that is currently investing or is looking to invest into the company. So as an investor or a potential stockholder of a company, you're going to want to look at 4 financial statements that we are going to break down today so you can better assess whether this company is a great company to invest in and ultimately find its value. Now, right before we take a look at the 4 different financial statements you need to know, we're going to go over just a few key terms. Just briefly want to go over the basic accounting equation. All you need for that are just 3 simple things. Assets. Assets are just resources that usually create a cash inflow for the business. Liabilities is anything that the business owes. Then stockholders' equity is just the shareholders' claim on a business. This just pretty much means, let's say I own 1 share of Apple. Right now, Apple's at around $300 per share. So I can go to the business and pretty much claim, hey, look, I have 1 share of Apple stock. So they go, okay, we will take that back and we'll give you back $300 because that's what the share price is currently worth. Now, the big thing we want to understand is that any assets that a company has to be equal to the amount of liabilities that it has plus the amount of stockholders' equity. So these are the 4 financial statements you need to know in order to be able to read how a business makes money. So the first one is an income statement. This pretty much just takes a company's revenues, or how much a company earns by selling goods or a service, as well as its expenses, or how much it costs to do business. The statement of retained earnings is just a report that shows the amount of net income that a company has made This is more commonly known as profit, but in accounting terms, you want to use the word net income. But again, just think of net income as profit. Mine is the amount of dividends paid out to its shareholders. Next, we have the balance sheet. The balance sheet just tells us the amount of assets, liabilities, and stockholders' equity that a business has at a certain point in time. Last but not least, we have the statement of cash flows. This is just a report that reports to external users the inflow and the outflow of cash during an accounting period. The three different ways that a company can either inflow cash or outflow cash is either through investing activities, operating activities, or financing activities. So we briefly went over the 4 different ways that a business can be organized. We went over the 4 different external users that read financial statements. We went over the accounting equation, as well as our 4 different financial statements that we want to read as an external investor. This was just a quick rundown on the language of business. I hope that you're now better able to understand how to invest into different businesses. Let me know what company's financial statements you want to read so that you can go ahead and start investing. If you enjoyed today's video, make sure to smash that like button or softly hit it, whatever preference. Please make sure to subscribe down below if you haven't already. Thanks for watching.